if I, yeah, that's what I'll be talking about. See, if you talk about fintech, what is the purpose? One of the major role was to bring into the unbanked population to solve the issues which are faced by the consumer from the traditional or incumbent banks, right? The whole purpose was is at a cheap rate or what. But eventually now what's happening, if you look into the advent of techfin who are going into the fintech space or going into the financial services space, it's all about making most out of it. They are not looking at the core issues, what they're supposed to do. We have so many banks already. Now we are going to the same thing of the fintech. We have so many platforms for different areas, but how do we differentiate? Do we look at the core issue of the problem here? Do we identify the challenges being faced by the fintech? Is anybody trying to help those things? Regulation still remains very vague in that space. So it's not, I'm talking from industry, I'm talking also from all the stakeholders, Mr. Nazri, where everybody has to contribute rather than just, and again, education is very important. The end users don't even know what is about digital currency. How does the payment platform can help them? How does these neo banks can help them? So there should be an education. As a normal person, I don't invest into cryptos because I feel scared about investing in crypto. I will only look into those platforms which are more secured, which really tells me, give me the value, and that's only I can talk about. Otherwise, there will be thousands of fintech out there, but not all of them doing the job which they're expected to do. My
So,
2 cents, Mr. Nazri. I might be too critical.
no worries. We like frank critique, what we call hard talk. Before I pass over to Charles for his views, I've got a question for Prof. Nafis. So what you're saying here, your observation is that majority of fintech players do not have a clear value proposition, are not so differentiated, too many players doing the same thing, and you are concerned that they're not addressing the core problem, the core pain points that FIs are doing. And this what makes up the hype that you talked about, right? In that context, right?
True.
Okay, so moving over to
Yeah.
Charles. Charles basically have done tier 1 financial institution work from the buyer side, right? From the banking side in Citibank. So you've dealt and observed more than 1,000 over vendors, IT vendors, who are servicing the bank, your former bank, Citibank,
Yes.
with their technological solutions. So do you echo the same views as Prof. Nafis? And it's okay to agree or disagree, right? But what we want is for the audience to hear your own little experience, short experience in this short session. First, whether they are undifferentiated, whether they're not solving the bank's pain points, whether majority of them, I'm talking in the context of majority, yeah? Majority of them are not, communicating clearly what they are solving. Your views on that, Charles, before we kickstart the session.
Thank you, Professor Nazri. Thank you, Professor Nafis.
We have
The market, the fintech
now
market is moving too
we
fast.
are going to same.
There's a bit of echo. Prof. Nafis, can you mute your mic for a while? Thank you.
Okay.
Go ahead,
Can
Charles.
you hear me? Yes. The fintech industry is the fastest moving industry, and over the last 30 years of my career, and there are new products, there are new services, and it's almost impossible to catch up. And Dr. Nafis said correctly that a lot of people talk about it, but there are a lot of people who doesn't understand how it works. And he gave a very solid example. He doesn't go into crypto because he doesn't know it long enough. Yes, my experience is sometimes technology, I don't even know certain technology exists until the vendor come to my door and knock at my door in the bank when I was in the bank. And it was because of this, I got to know some new technology because of the vendor. The vendor come and talk to me, and once they give me a update, a session to explain how it works, yes, we can pick up easily. And that is the best thing about technology. Yes, it moves very fast. We can learn it very fast, And we can also unlearn it very fast. And forever we have to unlearn what we have learned so that we can be relevant, we can catch up with the industry. And that's my take.
So you're saying that the pace is extremely fast, even from the buyer side, you may not know everything, right? That's out there. And this sort of like cloud the value proposition, because you also need to catch up what is the value proposition offered by the vendors versus your pain points that you already have in mind. So it boils back to what Prof. Nafis was mentioning earlier, right? If the vendors or the fintech players are not able to articulate their value proposition or what they're trying to solve, then he concluded that it's just a hype. It's just saying that I have a solution, but it does not going anywhere. It doesn't go anywhere. So I know we've spent a bit of time talking about fintech, but can I flip over to the left side, which is the AI part? So we talk about fintech as a generic term, from a payments, from a processing, right? From a financial technology to be used in a bank perspective. But how about AI? Is AI really hyped up situation, Prof. Nafis? And is AI really the way to go moving forward? This shall set the backdrop of our discussion today while waiting for more registrations to come in. I think there are slight delays from the other side, from the registration side. Okay, moving on. Prof. Nafis, what do you think?
My 2 cents, Mr. Nazri, I might be too critical.
Go ahead. I think there's something wrong with your audio. Can you hear us? We can't hear you, Prof. Nafis.
Yeah. True. Yeah.
Yeah, sorry, we could not hear you. We lost you there. I think the internet connection there is unstable. Can you repeat again, Prof. Nafis? You said you were critical of AI, and then we lost you. Would you be able to explain, do you view AI in the same class or in the same category of fintech? While waiting for that, maybe Charles, you can comment.
Yes, in AI, I see AI as a natural progression.
Yes, can you hear Mr. Nazri?
Okay, Professor Nafis is back online. Okay, Professor Nafis, your time.
Just give me a moment. Let me check my internet connectivity.
Yeah, meanwhile, maybe Charles can comment first to get the show going.
Yes,
yeah.
I see artificial intelligence is a natural progression of our legacy system. I mean, those days when we first started with data warehouse, then we have analytics, we have decision management. And from decision management, you progress into artificial intelligence, because the fundamental of artificial intelligence is about data. And that is where for the last 15 to 20 years, our work in data warehouse, our work in decision management, our work in analytics is a natural progression to artificial intelligence.
And do you think that AI is the hype that Prof. Nafis was talking about?
Yes, there is a lot of discussion about AI, but a lot of people, not many people know about AI enough. But if you look around us, AI is going to be part of our life. Like for example, I can register a company online just by talking to the chatbot, and that is AI. And there are things like the system will be able to recognize what is my spending pattern to be able to prompt me to certain advertisement. That is also AI, consumer AI. So it will be part of our life, and more so by the day. And later you'll see that there are actually a lot of AI players in the market. And all this create an immediate impact to our life. And one of them is the stock market, or the forex trading. A lot of these are using an AI platform.
Excellent. I know you're not going to give up a lot of the key points in your slides, so I shall leave it to you on that. Prof. Nafis, we have to get the show going. I hope you are in a better connection state. But let me pass over
Yes,
to the host. I have to start the session proper now. Perhaps Miza, can you take over and do the introduction to the panelists before we kickstart the session proper? Thank you so much, everyone.
Thank you, Mr. Nazri. Good morning, good afternoon, and evening, ladies and gentlemen. Wherever you are right now, we at MyFinB would like to welcome you to our webinar along with our partners from Asia Pacific University and AI Future Asia. My name is Miza, and I'm your host for today's webinar called AI in Fintech. We are pleased to have our guest speakers today, Professor Dr. Nafis, a specialist in Islamic finance fintech and winner of the upcoming Personality in Islamic Finance for 2016, awarded by GIFE. He has been ranked among top 100 global social media influencers in fintech by Refinitiv. Charles Cheong, CEO of Asia Future Asia, former regional software technology sourcing and procurement specialist in Citibank Asia Pacific, overseeing close to 1,000 of tech providers for the bank. He currently manages high net worth individuals and family offices with a focus on impact investing. This session will be moderated by Mr. M. Nazri, Adjunct Professor AI, founder and CEO of MyFinB Group, Center of Excellence in AI Innovation, CEAI. Without much further ado, let me hand over to the moderator who will provide the context of today's session and kickstart the program. Mr. Nazri.
Thank you, Miza. We are so privileged to have two distinguished panelists here, Charles and Prof. Nafis. Basically, today's topic is very interesting. There's a fintech component, there's an AI component. So what happens when we combine them together, right? So I'm sure it's going to be some kind of debate and some kind of critique and some kind of suggestions that gives us some sort of like a telescope or microscope into the future. So AI has become very much a leading trend, okay, that affects not only the fintech and insurtech, but also healthcare, BI, marketing, and capital markets. AI is supposed to make tasks efficient, lowest costs, while attempting to simulate human behavior and decision-making process. It's predicted to take over the new year and grow. Okay, over the years, it's expected to come and some would say conquer, or some would say take over, some would say threaten. Okay, so it depends on how we look at it. And we know that AI has the potential to eliminate human errors in banking procedures, allow banks to truly understand customer demands, make credit cards close to extinction, and influence the attraction of the unbanked to financial services, as what Prof. Nafis was alluding earlier. It will bring about a digital revolution to banking that will transform the process into ones that fits consumers' lives. So we have the doomsayers, doomsday kind of statement, and we have the light at the end of tunnel kind of statement. Now that is in the context of banks and financial institutions. Now in the context of capital markets, nearly half of capital market professionals around the world, based on a recent survey, says that they are already using AI in their trading and investment processes. It's a study done by Greenwich Associates. Yeah, they said that 44% already using AI and another 17% reporting plans to implement it in investment and trading in the next 1 to 2 years, which is a solid majority of market participants. That includes buy-side institutions, sell-side, exchanges, and others. So you can see AI being more widely used in the securities trading and even the fund management process, right? In the longer term, 4 out of 5 covered by Greenwich study expect that AI and machine learning to be integrated into the investment process. So a whopping 80% feels that in the longer term, trading, investment decisions, all will be done by AI within 3 to 5 years, right? And their firm will then have internal AI expertise within the time frame. So this is the interview done for practitioners, or rather solicited by practitioners in the capital markets. So we see that from a capital market, from the study, that respondents rank AI as the most disruptive technology in financial, or what you call capital markets, with millennials particularly sure of its impact in the coming years. So without much further ado, Charles will bring us along with his deck that he has prepared for us. And meanwhile, all participants will be given a worksheet. As we go along and discuss with one another, the worksheet serves as a framework for you to jot down notes. You can download it, and you can jot it down what you think necessary, as well as relevant. And you can use that framework to basically question the panelists, facilitated by yours truly. So without much further ado, over to you, Charles. Thank you. You have to unmute, Charles. Thank you.
Thank you, Professor Nazri. Good morning, good evening to everyone. We have people from the region, and we also have people from the US who's joining us. Yes, this is a subject that is very close to me, that I've been doing. I've been in the business for the last almost 30 years now. So can we go to the first slide? Yes, if you look at the market today, there are 6 priorities for this year that almost, according to Pricewaterhouse, they recommend you to do 6 things. And these are the 6 priorities that I see that not only for this year, but it's an ongoing thing. Like number 1, you update your IT operating system model, where you need to be able to be relevant to the new normal. And cost cutting is what I always do. Year on year, we try to find ways to cut costs, especially on the legacy system, which impacts our P&L, our profit and loss account all the time. And the most vendor will come to me and say that they wanted to increase the software license price. But for a user perspective, we have to reduce our costs, because in the context of a bank, we have to reduce our costs to sustain. We cannot afford to have our costs going up on a year-on-year basis. So cost reduction is a must. And number 3, we build technology capabilities and get more intelligence of our customer need. Today, if you know about your customer, half the battle is won. You need to know more about your customer. And the way to know it, technology. And number 4, you need to build an architecture to connect anything to anywhere. Very significant now that we have this pandemic, and we cannot tell our customers that we cannot operate because we cannot go to the office. The business must be agile enough that we can operate in any way 24/7. And that makes the world flat. The world is flat. And most people that you come across today, you find that people are just working around the clock. There's no such thing as 9 to 5 anymore. And number 5, because of this high reliance on data, cyber security is an issue. So this is something to keep a lookout for. And along the way, we need a lot of people who have skill sets. In a knowledge-based economy, skill set is important. And to get the right people will also contribute to your success. If you have the right people, there's a good chance that you'll be successful. And with this, in the banking sector, in the next slide, you will see that the AI stack, whether there is an AI or whether there's no AI, these are the few areas that the bank always look at, because banking is all about technology. Without technology, there's no banking. So the first one, we look at customer service, and today you see that a lot of virtual assistant is taking place. There are some robots talking to you on the phone. There are some people in a remote location talking to you when you want to open a bank account, and those are the customer service, and they start to put in things like machine learning from you. And for customer service, I saw that there is a lot of automation that is taking place, that they don't have so many real people talking to you anymore, and they use computer, they use intelligence. And in the banking world, a very important part of the bank is fraud management. And fraud management is a very tedious task. And banks lose money because they don't have a very strong fraud management strategy. And today, the robot can do it because of artificial intelligence. And similarly, in the financial advisory today, a lot of this work can be done by a robot. So they are all very specialized and they can work 24/7. And personally, as a user, I love it. In the middle of the night, I can't sleep and I want to do something. I know if I go to the bank who offer a financial advisory service using an automation of artificial intelligence, that will make the bank special. And AI-based, like for example, for this financial advisory, they have a built-in mechanism to make sure that they are talking to the person that they are supposed to talk to, or they are talking to the person of they think that who you are. So they have built in all the verification system, the identification system built in. So this is a continuous process in banking to make their system, business operation efficient and good customer service and robust fraud detection system. And in the next slide, you will see that is why the banks are now trying to deploy a lot of robots and AI-based automation. And I have witnessed it every time when we implement a new technology, we will have cut a lot of headcounts. But at the same time, we will also increase a lot of headcounts in the technology that we implement. So yes, we do have a replacement of headcounts, but our robotic process, we also need people with new skill to come in to help us to implement, to operate. Yes, along the way, the biggest benefit to the bank is we slash the cost and we've simplified all the legacy system, which is very heavy. And we saw that the banks, the financial institutions are more than open to accept cloud computing or software as a service compared to 15 years ago when software as a service when it first started. So financial institution is consistently trying to build technology capabilities to get a more intelligent positioning of their customers' need. And in the next slide, you will see that why the biggest market in the world, the China financial services, is banking so hard on artificial intelligence, because the China market knows China is very advanced today. They are one of the most advanced market in the world. When I talk to them about artificial intelligence, they will tell me, oh, I have been doing this for the last 4 years, 5 years. And yes, the numbers speak for itself. In 2018, the Chinese financial institution invested 23 billion in technology. And 23 billion in technology is very significant, yeah, by any industry. And the banking industry was the biggest investor in AI-related application, which contribute 70% of the total market purchase. So financial services is the biggest user of AI. So from things like advisory, from personalized products to improvement of fraud detection products. And the Chinese bank has one of the best fraud detection system that I have ever come across. If you go to China, you know what I mean. And along the way, let's take a look at how retail banks can leverage on AI in the next slide. But from my perspective, the retail banks are not leveraging on AI, but they had to be on AI because today customers or the consumers demand technology. They move fast because of the social media, because of mobile phone. And most banks, if the banks are not able to keep up with the challenges, they will lose a customer. So when they lose a customer, and very soon, as what the senior vice president of Tencent says, if the bank does not back up or you don't move with times, the bank will be dead by 1,000 cuts. And that is true. If you look at this slide, there are so many areas that needs to be done. The underwriting of an insurance company, the ID verification, the robo-advisors is hot, call center, the service robot, the biometric authentication, and all these are very important elements in financial services. And how can you do it in the split seconds? And in the next slide, you know that banks cannot do it alone today. In the past, they are always working on silo. When they have a technology, they will go on tight to the technology as a form of differentiation. Today, this differentiation is gone, and you've got to be a player. You've got to be a friend to other people. And that is where you see that the major banks are partnering with partners and specific partners who provide specific solution. Like for example, this company called Pling is an AI platform developed by Bank Colombia to sell location intelligence to merchants. We have Personetics, an app automatically set aside money for savings based on user spending. And this is done on artificial intelligence. We have BBVA, a Spanish bank, partnered with Google to use current neural networks for the PFM. So these are some examples. And in the next slide, you'll know that why the bank is doing it. Okay, this is one reason why. The customer need it fast, immediately. So this is like a quick fix. And two most important things the customer look for is well-building and wise the personal finance management. In the next slide, you see that in the applications of anti-money laundering and the KYC, can we go back to the next previous slides, please? See, in money laundering and KYC compliance, when the bank doesn't pay enough attention, they will pay a lot of fines, non-compliance fines, when, because the money laundering is not well done. And as a result, some people do some transactions that is against the law, and they are penalized. With AI, they can monitor transactions, they can do entity resolution, and they know how to track down. The AI will track who is the ultimate beneficiary owner, which is very important. And the media monitoring is one part that human being will not be able to do so comprehensive than compared to an AI system. And if we go to the next slide, the biggest hedge fund company in the world called Bridgewater has already done it in 2017 using AI. This is a company with 160 billion asset under management, and they use the fund is using historical data, statistical probabilities, and they have their own system called the principal operating system. And what they do gives them a leading edge 3 years ago, and used to be proprietary because it was very expensive and difficult to set up. And they become a leader. They cover almost every part of artificial intelligence. And today they are still a very successful hedge fund company. But a lot of other hedge fund companies are catching up. And look at Credit Suisse. Credit Suisse do a joint venture because they know the fastest way is to do a joint venture with an AI firm to monitor the irregular trading behavior of the trading system and to spot a suspicious transaction, to preempt the bank in case somebody is trying to break the law. And if we move on to the next slide, McKinsey's reported that robo-advisors today, they dominate, they manage up to $13.5 trillion as of by end of this year. So robot advisors is important, and robot advisors will do a lot of things that human beings can't do. Even though human beings are the first one to do all this analysis, but you need something more robust. That's why you need the robot advisors. And in the next slide, you see that Bank of America, they did AI to the equity capital market simply because this is the most efficient way to go about doing it. And so they are one of the first mover, and today they are doing very well because this is one area where it's crucial, especially when you talk about IPOs, when you talk about relationship with investor, where you must have tip-top information at the fingertips. And when you want to identify investors, and where do you identify investors? yes, through an AI, you can have a more structured and systematic approach to identify, to qualify the right investor. And similarly to Citibank, in Citibank, they have done AI innovation. When I was there, they work with one of the best statistical analytics software company in the world called SAS, and they created a scoring engine. And because they created a scoring engine, the bank is able to make a very accurate and informed decision to analyze the company financial statements, the approval process, which is similar to what MyFinB is doing, where you can even scan hard copies of the client financial data, and you can use AI to analyze it. Or if you have digital data, it's even better. So banks use this, and there is always there's a big market, there's a big demand to get this done. So anybody who's doing AI business, you are in the right business. And in the next slide, you see that there are so many startups in the fintech today. There is a room for everybody. There's a market for everybody. You have a predictive analysis vendors, people like Data Robot. Then we have quantitative trading. We have the AI assistant, the credit scoring, the fraud detection, blockchain, debt collection, market research, and search engine. So the possibility are endless. Now you see a list of 40 over startups, and every month there is a new startup that comes to the market. So the conclusion is, you have the market is there, and everybody is welcome. People like Goldman Sachs has been actively investing into these companies for the last 2 years. Like they have invested in Context, digital reasoning systems, Kenzo, and Datamind. And these are the existing. In the next slide, you see that they are the existing AI players in the fintech area. Some of them you may know them, some of them you may not know them. So this is how technology is. You may not know all of them, and you will never be able to catch up. But whatever that you can catch up, I think it helps you to get what you want, and that is more important. So like if you look at the next slide, we have Nasdaq using AI to do the stock market surveillance. And all these are possible today. Commerce Bank using AI to do research report. So you don't need human beings anymore. I mean, you don't need so many head counts, but you still need a bit of head counts. You don't need so many head counts. AI can write research report. Yeah, MyFinB has done this before. And lastly, my last one will be China. China is still a very clear leader of AI venture capital investment because of the size of the market. The size of the market is such that makes them a clear leader. But in conclusion, financial institutions has to accept and it's happening that banking as a service is here to stay. In the past, regulators will not accept banking as a service because of sensitive data, customer information protection. But today, banking is as a service become a norm, and artificial intelligence is part of banking as a service. And that's all I have for you today. I hope you get a glimpse of what is in for you and something that you can good to take away from. Thank you.
Thank you so much, Charles. Very rich contents, very useful contents, I might add, and to give us some insights on how the broad spectrum of fintech is being adopted by banks in different capacity, different regions, different sizes. At the same time, you tend to adopt a more positive, more optimistic, I would say, perspective of how AI and could be deployed in the fintech environment, in particular the capital markets, which you explained briefly. We are now, there are questions coming from the floor very early in the session. So I hope you can take a look at those questions first before you respond to them. I would like Prof. Nafis to step in and maybe share his perspectives and insights on AI fintech from a perspective. Meanwhile, I know that there will be questions about how do you differentiate fintech and AI. We've gotten some infographics for you to share, and I would like the panelists to comment on that later. And we are certainly, rest assured, we are looking through your questions and we'll address them. Yeah. But in the interest of time, let's get in Professor Dr. Nafis first. Perhaps he has a different perspective about this topic. Go ahead, Prof. Nafis. Over to you.
Thank you, Mr. Nazri. Nisa, can you give me access to share my screen, because I can't share my screen?
Okay, can you try now?
Thank you, Mr.
While waiting for the slides to appear, there are actually two questions, right? One is, what's the difference between fintech and AI? Right, so that's a very fair, valid question, and we expect that question to surface because we see an overlap, we see mutual dependency relationship. The second one is, how do you see AI transforming lending, which is Prof. Nafis' area, and loan management for retail banks. So without much further ado, the slides are up. I'll send it over back to Prof. Nafis. Thank you.
Thank you, Mr. Nazri. And thank you, Charles, for taking the lead. And I think you have covered a lot of experiences of AI in financial services, including the capital market. If you see from my slide, I'm going to take a different view here. I will be more talking on how AI can help in surveillance, because that's one area which was not too much discussed in Charles' presentation. So I just how we can look into that. Technology has always been used as a tool to enhance the security, capabilities, experiences, as well as the efficiency of any system. And we have been learning with this first what it's going to do with that. We always look into, does it play a big role in, at the same time, how does it help in looking into detecting fraud and overcoming that. In fact, that's why I'm talking about this surveillance is important, because even though we have seen that it was a big change during the COVID-19 era, when the people were moving away from the physical interaction with the banks or financial services, and they were pretty much dependent on the technology, working remotely and using the solution to do that. And at the same time, we have seen a lot of reports coming up that there have been a lot of scams, there have been a lot of frauds, there have been a lot of mistransaction, there have been a lot of hacking of
We lost you there, Prof. Nafis. You might want to repeat in the last 30 seconds or so. Prof. Nafis, we cannot hear you. You have to change your network or...
Based on that learning from the system, we can also see that does it have any reasoning. Am I visible to
the issue is not visual.
Are you able to see my slides, Mr. Nazri?
Yeah, we cannot hear. We cannot
am
hear
I
your
visible?
audio.
Can you see my slides? Hello. Okay. Again, we are talking about technology here, and sometimes technology doesn't support us. Yeah, but coming back to it, I was talking about that. How does it? I'm extremely sorry for that experience. It never happened before, but let me see if I can use some other location to do that.
Yes,
I'm just
please.
looking for a better view here. Is it more better here? Are you able to see me?
The issue
I
is not.
have done a video presentation at the same location a week ago, and it was all working fine. So, um,
Dr.
can you
Nafis,
hear me, Mr. Nazri, now?
intermittent, because if you are still in the same place, we cannot hear you. It's intermittent, and it's not the visual, it's the audio. The slides look fine, but the audio is very intermittent. So yeah,
Is it better now?
you can try. I mean, we can't know until you speak a few moments later.
Yeah. So,
Okay.
uh, can you hear me now? Can you hear
Yes.
me now?
Yep.
Okay. Activity this afternoon.
Maybe you can switch off your video, or it's already off. Yeah. For managing bad
Let me
noise.
go. Let me go in an open location.
Yeah. Yeah. We'll give you another five
Maybe the
minutes.
open
I
location
will
gives a
tackle the.
better view here.
Yeah. Meanwhile, please mute your phone first, and I will tackle the Q&A with Charles. Yeah. So there's a question on what is the difference between fintech and AI. For those who just tune in, what do you think, Charles? What do you think is the difference between fintech and AI? And maybe admin could also show the what do you call that, infographics, what you call the technology landscape, so that we can have a better idea and visually. Second is, how do you see AI transforming lending? Okay, so when you talk about transformation in lending, loan activities, right? Surely there are things that Charles and I spoke about quite often, about convenience, about speed, about depth, about accuracy, about error free, which is accuracy, right? But how do you ensure that all these lead to a higher productivity and lower cost? So there have been many examples that Charles had shown earlier, and in more details, how can AI transform lending and loan management for retail banks, right? Especially the processing part, right, Charles? What do you think?
Yeah. The processing part is very time consuming and also labor intensive. So by using AI, it helps to automate the lending process, especially the loan origination part of it, where you you need to look at all the documents, you need to do a credit scoring. And credit scoring is a very accurate thing to do, because the machine will take all the data input from whatever sources, and it will do a scoring based on certain analytics and intelligence. So with the credit scoring, bank depends very heavily on the credit scoring to determine how much they're going to give you a loan, or whether they're going to approve your loan. And when it comes to loan management, they know that what is the probability that you're going to default. By using AI, there will be a analysis for that. So this is extremely important for retail banks. Retail banks are high volume transaction business, but the margin is extremely low. All you need is one person to default, and you're going to take this guy to court, and all your margin that you earn is gone. So this is a very sensitive business, and consumer banking or retail banking is the most dependent on technology, and they are the most robust user. But at the same time, they must consistently keep the technology cost low, so that the margin can support the technology cost.
Okay, so from the context of retail lending, which is a very expensive undertaking, yeah, just on the cost to income ratio for retail is very high, because of the
Yep.
need to serve high volume transactions, very low amount relatively to the other loan types, right? So you can see how AI transform based on the value chain at the very steps. Okay, at the application stage, at the origination reviewing stage, at the approval stage, at the disbursement stage, and at the monitoring and collection stage. So
Yes.
based on these few key value chain of lending, you can see that AI can mimic the way human activities done by automating and by making decisions. on behalf of the humans or making recommendations to the human. So let's say 10,000 applications coming today. How long and how many people would be needed to approve and review and approve that 10,000 applications? With humans, it will take weeks, right? If you do it manually, one by one by one, or you would need hundreds of people. One person may take 10 applications to finish within a day. So you can do the maths. How many manpower needed to approve a credit card or a automotive loan? But with AI, that 10,000 applications can be done depending on the infra, right? Within the hour, within the day, within 10 minutes. So these are the kind of pervasive impact on AI on lending activities. Okay, so can I have the image, admin, on fintech and AI? So to differentiate between fintech and AI, while waiting for Prof. Nafis to come in, basically we show you this visual. Okay, Niza, are you there?
Yes, give me a moment.
Yeah, just flash the image one by one also is okay, no problem. So when it comes to fintech, there are different components on fintech that we must know that are illustrated by participation by different players. Okay, from payments to remittance, right, to chatbots and all those. Okay, so and AI on the other hand is very specific to solve a decision-making process. AI is not a chatbot, as what Charles said. It's not just borrowing a watch and tell you the time. It is actually a very powerful decision-making process, okay, to solve a complex or a routine problem. So AI is more on the application side and is an add-on to the fintech technology or the financial technology that are being applied on banks. Okay. Okay. While waiting for the image, Niza, just flash the image I shared you. Yeah. Thank you. I think Professor Nafis has just highlighted to me he's good to start with his other slides. If the slides are not available yet. Okay, over to you, Prof. Nafis, and hopefully the audio works better this time, yeah? Just you have another 5 minutes more to go through, Prof. Nafis, yeah? Thank you.
Yes. Sorry for the inconvenience to the audience. Are you able to hear me now this time around?
Yeah, just go ahead, please. You got 5 minutes.
Is it clear, audible to the audience?
For now, it's clear. Please kindly proceed. We have another 5 minutes. Thank you. We'll let you know if through WhatsApp if you have problem listening to you. Yeah?
Can you hear me? Can you hear me?
Yes, now it's clear.
Mr. Nazri, can you hear me?
Yep. Yes. Go ahead, please.
Mr. Nazri, can you hear me?
Yes.
Hello? Okay, that's good. Mr. Nazri, can you? Okay. I know I've lost a bit of time here, but I will try to go through it quickly. Which I was more focused on was to look into how does the AI help in the surveillance system. And when it comes to the surveillance, AI has a lot of to contribute to the financial services for the learning from the digital footprints. Basically, when users are using the system, they are creating that digital footprint, and that will come up with some type of rules, some type of algorithm, and that will help the AI system to draw some conclusion. Now, if the conclusions are not in line with the expectation of the system provider, it will try to provide some type of corrective measure. So that is the whole purpose of bringing AI into the system. Now, the reason why we are focusing too much of AI in terms of providing solution to the financial services is the biggest area is the fraud detection. Now, if I look into the fraud detection, what is happening here? The fraud detection is getting more and more visible into the financial services space with the advent of technology, where we're supposed to provide security to the users as well as to the provider. At the same time, there is also availability that there are hackers around who will be breaching the system and taking over and getting the advantage for their own benefit. So it is going to be important where the users need to provide how much information is there. Now let's take an example. What happens when the the AI system is able to give some type of information? Now using the collaborative filtering, for example, the system will be able to find transaction with missing, matching, or odd information, for example. Now if you are a user and sending money to first time to user, the system will always detect and maybe go through a certain level of scrutiny before approving that. Why? It is not that the system is making your experiences bit odd or to cream for you, but it's trying to provide some type of satisfaction that this is the authorized user doing it. The other way to look into that, the feature matching, for example, if you are going to have a transaction below a specific threshold or above a specific threshold which is set by the user, again the AI system will be able to pick that up. How it will happen? That it will be able to see that why a particular user is able to send a certain level of money to the beneficiary, and why the money is not used with the same purpose. For example, if I set up a limit of $5,000 on a daily basis, and suddenly I'm trying to transact 7,000, this can be picked up by the system, and the system will not allow you to further go ahead with the transaction until and unless you are going to see that the system is satisfied with it. So initially what we are looking here is that we are giving a lot of control to the system, and the system is able to help that self correction. Now also try to understand, we are also using the system called a fuzzy logic into the AI system, into the financial services. Now this fuzzy logic will help to find the data with slight changes to the names or address. Recently, in fact, 2 days back, there was a wrong transaction happened at the Citibank, which sent the money to the wrong beneficiary. And if they have been adopting, and I believe they already have a very well established system in their place, but even with the bank at the Citibank capabilities, they were not able to detect that the beneficiary was wrong and a wrong transaction was carried out. So sometimes system like AI will provide certain level of confidence to the user, and that will take you to the advantage of how it's going to look into that. Another area of AI surveillance is coming into the biometrics. Days when we used to have those we used to have that fingerprint scanning and so on. Now we are even going into the facial scanning, and using the AI, the system will be able to develop whether the users are the right one. So you don't need any other type of identification or verification. It might be using your retina scan, or it might be using your facial scan to do that. So these are some of the areas where AI is able to provide surveillance and provide the fraud prevention. Because even though the banking system is 134 trillion industry, but unfortunately banking sector is also one of the industry which is facing a lot of issue when it comes to the fraud and the scam by the hackers. So this is going to have a difficulty in reporting that. Now one area which Charles didn't talk about, and I'm very keen to look into that, is to understand how does the blockchain is helping in coming up with in increasing the capacity of the financial services. Now blockchain is giving a lot of benefits to the financial institution. One is in the area of the payments, DLT system of the Bitcoin, decentralized ledger. You can use cryptocurrencies, or you can use central bank digital currency, where you can look into the very low fees. Imagine those were the days when we were using Swift, and it will take few days, and a lot of fees will be involved in doing that. Now banks are trying to move away from Swift, use their system on blockchain, and try to do the clearance and settlement system. At the same time, we are also using blockchain for fundraising. For example, last time the company used to go into IPOs, which was the initial public offering, and they were looking into issuing the stocks to raise the money. But right now they're not using the stocks. They are basically trying to use the money for the initial coin offering, where people can invest into the coins and they can raise the money through that. Again, that gives a certain level of satisfaction, certain level of confidence to the people who are looking it, because using the blockchain they are able to identify where the money is being utilized, how the money will be used, and what are the different players involved in the whole transaction. Blockchain can be also used into the loans and credit. Now we don't need gatekeepers, especially when we go through the banking system. We are looking at a lot of gatekeepers. It will be from your credit evaluator, it will be from the bank manager, it's from the decision making coming from the team of the people who will provide some type of solution. Now if we are using the blockchain system into the banking, what we are trying to do here, we are looking at the most secured, the parties which are supposed to be involved in the whole process will be there, and every entity involved in the process will be able to see that. Now when we reduce the number of gatekeepers, the number of processes, that is also going to reduce the importance of the cost. The cost will become cheaper, and that is going to help the users as well as the providers. Apologies if I'm rushing. Area which I was talking Mr. Nazri earlier was whether the AI adoption in banking is really a worth. Does it really create or provide that type of incentive to the bank? I've just picked up this image from the Business Insider, which was at the end of the last year, and we look at how much savings the bank can bring if they are using the AI system into the front office, middle office, and back office. The values are available there: 199 billion for the front office, 217 billion for the middle office, as well as 31 billion for the back office. We are looking at a 500 billion of worth of saving. But what is this advantage? Are the banks are able to utilize that? Imagine, in order to get into the actual use of the AI, it is not cheap for the financial institution. Again, we are looking at the size does matter. When it comes to the big bank, they will be able to adopt this system and make the system more safe, secured, and more efficient. But what happens to the small banks? What happens to the banks in the developing part of the world or developed part of the world? Because we are talking about the interconnectivity, the financial globalization, where we're talking about all the institutions, all the countries where are globally connected. So if we are not able to reduce the cost of the implementation of AI in the financial services institution, we are still missing the boat. So the message goes back to the developer. The message goes back to the innovator who are looking into these systems. Are this system accessible to all financial institutions? Are this system available for every users to be used in that? And how does the bank come into that? So again, it depends on the need and the requirement of the financial institution, where do they want to place these AI system in practice. One of the areas which I always talk about is the protection of the user, and that's why the anti-fraud and risk management is the bigger area to look into that. We do talk about money laundering, and in fact, if we see the recent scandals of the Wirecard, for example, one of the bigger area was to look into the money laundering, where the transaction was not properly captured, even though there were signs given by the German regulators, but the platform was not able to capture that. So again, it gives us a thought for food, whether the systems are comprehensive enough to detect that, or are we using the system to our full advantage, or we are still trying and testing with the system. Another way to look into the AI application into the banking services will be to look into the smart contract infrastructure. When we talk about smart contracts, we are going to protect each and every individual involved in the process of these transactions. So are these people being made aware of it? Are they understand what are the channels involved, or who are the players involved, and what are the risks involved in that? So that goes back to a lot of education, lot of implementation, lot of testing. I believe in the current time, AI is bit hyped at the moment, and it is only available to the bigger institution, and a more generic usage will still take maybe 5 years to go into the system where everybody will be able to utilize. So it has to come from the policy maker. It has to come from the regulator, where we should have an effort to develop a system which is more accessible and which to protect the user in drawing that. One of the things which I was talking to Mr. Nazri earlier when we were setting up this seminar was to look into how does the AI or the fintech can help the user during this COVID pandemic. One of the bigger area which we have not talked about is about the access of finance to SMEs, access of finance to the people who are coming out of these financial crises. Where does the role of the fintech and AI comes into place? Now, if we see all these data and information coming from that, we have seen that the banks are giving moratorium, banks are giving some type of economic and financial incentive to the users. But where does the decision come from? Is it a blanket decision? Is everybody being treated on the same level, or are we talking about preference given to the certain individuals and so on? So definitely these big data coming out of the crisis period should be evaluated, should be analyzed, and the decision or the incentive should go to the people who are more marginalized, who are more unbanked, looking for that. So the role of AI and fintech in SME financing, in providing credit to the unbanked population, becomes more important rather than having a blanket ruling to everyone. And that is the bigger challenge we are going to face now. Whether the fintech is accessible to everyone, is fintech is able to provide the services or the advantage which has been designed for that. I think we are at the moment missing that particular boat, and a lot of things can be discussed on that. Now, I just want to summarize what can be the future for the banks to look at when they are going to adopt the AI and fintech. They just don't adopt the system as it is they want to. Most of the banks are following the bandwagon, and they are trying to follow what other banks are doing, whether it comes to the digital currency, whether they come to the payment gateway, whether they're looking into the open banking issues and so on. It all depends on engaging the customer. What are the needs and demands, and what type of services is need? It is not necessarily that one choose fits all. It all depends on individual customers. So the fintech application or the services region to region and so on. So the role of the regulator and the policymakers should come from there. What is the pressing need of the customer in a particular jurisdiction? Why they need fintech? What is the purpose? And that's what happening. For example, if I take example of some of the countries in the MENA region, for example, in the North Africa, they are trying to look into the access to finance, how these platforms can provide, what can be the channels of remittance, and what can be a channel of payment. That is going to be the future of adoption of fintech into the banking sector. Again, banks need to collaborate, they need to partner. Instead of treating fintech as a competitor, it is the right opportunity for banks to treat fintech as a partner. See, there is an advantage. Banks are incumbent, banks are traditional institutions, they have huge amount of capital, they have huge amount of customer base, but they do not have investment into technology. They might be lagging behind. Many banks still are way behind in terms of technology. They are still using the legacy core banking system, which they cannot just simply move on to the new technology. So instead of looking into driving the technology in-house, they can look for partnership with the fintech, bring into the technology, enhance their delivery, and try to see what are the demands and services for the customer. At the same time, instead of looking at the bigger picture of everything they want to innovate, the keyword, the buzzword is digital transformation. But innovation should come from the need of the customer, which areas they want to innovate. And it's rather than becoming innovation of repetitive innovation, there should be a collaboration between the banks. And that's why we are talking about the open banking system. If one particular bank is able to generate some type of investment there, they should be sharing with other banks. So it all goes back to between the collaboration, and depending on the partnership between different banks, that will help you to the financial industry to grow further. And banks should not be facing they should not be scared of disruption. They should be embracing the disruption. Is either adopt the disruption. So there is a lot of opportunity for the banks to look into that. And I have been just prompted by the organizer that the time is up. So I will just conclude that the bank and the financial institution should harness AI for transformation and just not should join the bandwagon. Thank you.
Thank you, Professor Nafis. Similar to Charles, we have quite a very rich set of information that is extremely useful for us to refer to and take home some of these key points. So what we've heard from the two distinguished panelists is we've seen the processes, we've seen the strategic use of it, we've seen the challenges that are faced by institutions that wants to adopt fintech, or in this case AI, into fintech. So I would like to use this opportunity, the last 5 or 8 minutes or so, to open the questions, invite some questions from the floor, and see if we can gather some more good questions for us to answer. Maybe, thank you, Prof. Nafis. There are some questions that were shared when you were transiting, and it's about your views on how do you see AI transforming lending and loan management for retail banks. Your views on that, Prof. How is AI being used to transform lending and loan management for retail banks? Your thoughts on it? I know you covered quite a bit on security, right? But maybe you can also talk about elements of security inside this question.
Sure. Thank you, Mr. Nazri. I did talk about bit on lending towards the end of my discussion. So again, when it comes to the lending, we are looking more at the credit evaluation, right? The whole purpose of moving to the fintech platform is to make the finance accessible and available to everyone who deemed beneficial out of it. When it comes to the banking system, we have a lot of documentation. We have a lot of incumbent processes available in the banks, which sometimes do not look at those entrepreneurial activities, which also makes very difficult for the SMEs, especially the entrepreneurs, to go and access the finance for the big banks. Now here the AI system or the fintech providers can come into the play. They can look at the trend. They can look at from the experiences. If they have provided the data to a similar type of business idea, which might be coming from a very newcomer, and it has been successful, they don't need to really worry about the credit risk here. The credit risk may be coming up from the bigger beneficiaries. But if you're talking about the small entities, especially the SMEs, they're not looking at a big amount of money, and that type of experiences from the service providers will give the advantage. And again, the cost. If we are able to remove those gatekeepers, I mentioned to you earlier, there are a lot of gatekeepers in evolving into the incumbent banking system. That increases the cost, and the cost is always passed on to the consumers or to the beneficiaries. So the AI system or the fintech platform can really help to remove those hurdles, make the thing more cheaper, and make it more accessible to the borrowers, and that's how we can promote the borrowing into the system, Mr. Nazri.
Thank you, Prof. Nafis. And the earlier question, which is fundamental to this webinar, it sounds very simple. What is the difference between fintech and AI? So we attempt to give you a visual, the audience a visual of how fintech is generally categorized, right? So there are the multi-currency cards, robo-advisors, P2P lending, remittance, and so on. So there are definitely more than just these 8 segments of the fintech. But when you were to compare the AI landscape, right, the AI map, how will it look like? Then later on, I would like the panelists to chip in and see how these are being differentiated or what are the similar things. Here we have the CB Insights AI 100. You can see how the AI players are being categorized, by way of sector, like how AI is being used in retail and warehousing, government city planning, legal, media, entertainment, education. You notice how this is being segmented. AI is being applied at the industry-wide or sector-wide. Okay, and then take a look at the upper half of this infographics, how AI is being applied for healthcare, finance, transportation. This is typically how they're being mapped at the macro level. And if you go back to the earlier fintech landscaping, You can see this is based on somewhat activities or functions or value chain of activities. It's about the payments, it's about the financing, it's about remittance, transfer of money, right? It's about P2P lending, right? It's about advising financial decisions on investments. So, so with this backdrop, I would like to invite the panelists to differentiate between what you think. I know they are relating to one another, they're dependent on one another. So true to this title called AI in FinTech, somebody asked a question, what's the difference between FinTech and AI and how they are mixing up together. So this is a good roundup of our discussion, yeah? In addition to your very solid deck that you shared. Who wants to start first?
Yeah. I can go first,
Okay, go ahead.
Mr. Nazri.
Okay, go ahead.
It's a interesting area to look at because there's always a confusion between AI and fintech. Basically, fintech is a bigger landscape. Fintech is looking into the application of tech into the financial services, right? And AI is one of the tools of that technology which is being used. So AI is more like an enabler, and fintech is more like a service provider where you are using. So AI is just a component of fintech. So if I have to put into a mathematical diagram, AI will be a small subset of the fintech. Basically, AI can be utilized in any area of financial services and other industries as well, what has been mentioned here, across every area of education, healthcare, and so on. Basically, AI will help the fintech providers or the tech providers as well as the services provider to see how the data or the decision making coming out of data will make the services more efficient, more cheaper, and more secured. So AI is just an enabler. It is not a type of fintech. It is just an enabler for the fintech, and that is going to help and make the fintech more and more useful as well as beneficial to the user. That's a simple definition and simple.
So you are saying that AI can enhance the existing fintech solutions. It is a subset of fintech, but yet at the same time,
yes, AI is more like an enabler and more like a solution provider to the fintech services.
So it is like a steroid for athletes in a good way. Is that right?
Yeah.
Okay, Charles, what about you? What do you think?
Yeah, we can say like that.
Yes, yes, AI is definitely a subset of fintech. I mean, fintech in a full meaning means financial technology. Financial technology consists of all other technology combined together, and you become fintech. And in the past, the banks will have all this technology built within the bank, and after that, it becomes too expensive to host all these application and all these specific applications, because some applications you don't need to have to get into the banking system to host this app. And the greatest implication to the bank is when you hold too many applications, the bank infrastructure becomes so heavy, your transactional cost goes up, and it makes the bank not profitable. Like we used to pay like $20 per transaction for a SWIFT transaction, which is very expensive because when we are doing a foreign currency trading, the forex trading online using a SWIFT or cash reconciliation, and every cash reconcile costs us $20. So that will not be a viable thing to do. But now, because of fintech, because of artificial intelligence, and because there are a lot of small players move away from the banking system and says, look, this is one service that I don't need to get into the banking system. For example, peer-to-peer lending, I don't need to get into the banking system, but we are still doing what the bank do. And we can do like remittance. Remittance is a very small business, not a big volume, but a small, I mean, the volume is big, but the transaction is a lot of transactions. So remittance, you don't need to be at a bank, and they take over this and do it on a smaller scale. So bank has come to the stage where there are more and more players in the market doing different segment of the financial services. And that is why you start to see bank has to follow what the market is doing. If they do not follow, the bank will become irrelevant and the bank will go out of business.
Thank you, Charles. I think in order to recap how AI is being deployed in fintech. We've talked about how AI is a subset of fintech, and within fintech itself, it relates to the activities, the processing, the value chain. Now, I would just wrap up by sharing a little bit of our experience. The type of AI that can be applied in fintech will be using the concept of what you call NLGU, which is natural language generation understanding, machine learning and natural language processing and understanding to analyze structured and unstructured data respectively. So what we are saying here is AI when it's able to do what you call moderate to strong AI, when it's able to tell you what happened, why did it happen, right? And what can happen in the future. Level 3, level 4 is what needs to be done and how to monitor. So these are applicable to any fintech situation that you've seen earlier on, whether it's on cybersecurity, whether it's on payments or remittances and so on. So you can basically analyze the transactions, which is very much on the left side called structured data. And you can also analyze textual or qualitative information, which is on the right side. So the corresponding engine that delivers the level 1 to level 5 is backed by what you call machine learning for it to learn and understand the trends, predicting and ascertaining the patterns and so on and so forth. So AI in fintech is extremely relevant. AI in fintech is extremely useful. The impact is almost instantaneous. You can see that you can control many risks. You can control the outcomes that you want by studying the underlying data. Okay, so maybe last few words from Charles as well as Prof. Nafis, comments on this diagram. Perhaps starting with Charles and Prof. Nafis, then we can end the session.
Yes. AI is...
Stick to the diagram, please. Thanks. Yeah.
Okay. AI is definitely the enabler. It's like the booster of the technology of the fintech. Without AI, we can still do what we need to do, but will not be so productive. And that is why with AI, business can perform better. They have a higher profit margin. They can respond to customer faster, and they have a shorter turnaround. They reduce labor costs, and they become more laser edge type of accuracy in business.
How about you, Prof. Nafis? Comments on AI in fintech as a key takeaway?
Yeah, sure. Thank you, Mr. Nazri. I just want to conclude by saying that it all depends on the application of AI into fintech. What is the purpose? Why the developer or the provider are using it? It should be put to the right use, because we should not forget that AI will give you the solution based on what data you key in or what type of requirement you have. So the application or also the implementation of AI is very crucial to understand the need and the demand of the users and to get the right information. That because if the AI goes wrong, we can always blame the system, but we should not forget that AI is the one which has been created by and the data has been fed by the human themselves. So that becomes important in that aspect. Thank you.
Thank you for the succinct concluding remarks. So on behalf of the audience, we'd like to thank Prof. Nafis and Mr. Charles for sharing their very rich and insightful deck and their experience and expertise in this topic. We certainly benefit a lot from them. And to the audience, thank you so much for tuning in. We hope to see you in episode 2 and episode 3 with APU. Can I have a view of what is episode 2? Oh, okay. Because Prof. Nafis is from he's the professor of finance, head of School of Accounting and Finance. We felt that it will do him injustice if we do not cover how AI is being used for auditors. So today's episode is about AI for fintech, right? In the context of financial institutions and capital markets to some extent, the last 1 hour or so. But episode 2 is on the accounting and auditing profession. So this is where we like to hear more of how AI can be used in the context of accountants, yeah? And what's episode 3, by the way? So episode 2, it's about AI for auditors. You can register there very quickly. And episode 3, Okay, there is some delay. Sorry about that. Prof. Nafis, do you recall what's episode 3 about? AI in the context of which segment? Disruptive tech. Okay, this is more on the profession, about reskilling and upskilling in the context of accounting and finance professional. So one is about the banking sector, second is about the accounting profession, third one is about finance and accounting profession, as in the individuals, what they need to do to stay relevant. So with that, thank you so much for your time, everyone, and have a good week ahead. Thank you, panelists, Charles and Prof. Nafis. We will let the slides flow on in the next 10 minutes or so for people to register and understand the upcoming events, and even post any questions in the Zoom
Thank
group
you.
chat.
Thank you, Mr. Nazri.
We'll be happy to address all the questions.
Thank you very much, everybody.